Hi there, my name is Pete Mardell. I'm the CEO of a new startup blockchain company within the games industry called TriForce Tokens. And I just wanted to do this video just to give a bit of a background history about my involvement in the blockchain space and cryptocurrency, and basically how I came to be starting up my own project. So it kind of started probably 6-7 years ago within foreign currencies market, trading Forex, just as a hobby, wasn't anything really serious. Because I've got a bit of a programming background, I was very interested in creating trading robots and studying a great deal of trading and looking at charts, different trading strategies for the Forex market. There's a few lessons that I've learned from doing that are applicable in the cryptocurrency space. I see a lot of the same things happening. But anyway, I'll fast forward a little bit to how I actually got into crypto. It was around 2011. I believe Bitcoin was at the price of about $11, and I thought this seems quite cool. Didn't really know too much about it. I heard about the mining, so I wanted to get into the mining. I'd done a little bit of that. Fortunately, I didn't generate loads of Bitcoin at that time, and it was on a rubbishy, cheap, well, it was a free computer that I had running and generating, doing this mining. That's definitely gone, unfortunately, because they were about $11 at that time. Anyway, yeah, it was more of a hobby sort of interest within Bitcoin space, and then I really took it seriously back in late 2016 when I noticed Bitcoin had dropped and then it started picking up. And I'd always been interested in it, but I just, there was a few new interesting things coming out. Ethereum had been out, so I started looking at new projects, and I particularly started looking at the ICO space. ICO stands for initial coin offering. That's where a project will create a certain supply of tokens and issue them out. It's exactly like a crowd sale, so people can come in and buy your coin or cryptocurrency quite cheap and get your project launched and get a lot of the cryptocurrency distributed out quite quickly. So I started within that. And my strategy was, first I looked at projects that I thought were really interesting, that were solving real world solutions and that had a clear long-term vision, something that was unique. When I found those projects, I just gradually started scaling into them, buying small portions at a time. Once my confidence grew even more, I would go in a bit heavier in some projects. One or two didn't really work out, but the majority of them did, and I made enough capital to be able to launch my own company now, trading pretty successfully. Although, to be fair, you could literally have a monkey trade at that time and they would come away making money. So it's it didn't require a great deal of skill then. So I want to get back to the whole point of this video, which is to share what I've learned while trading cryptocurrencies and helping you to avoid common mistakes. There's a lot of BS out there as well, with fairly prominent people saying that Bitcoin is not going to go past this certain price point, or it's not going to drop past this point, or it's going to reach this in so many weeks, and you just can never tell. You don't know what is going to happen in the future, for a start. No one knows what's going to happen in the future, so they're trying to predict the future, and you just can't do that. So what you can do is trade a little bit smarter, where you'll reduce your risk. And that's kind of what I wanted to go over. Going back to when I was trading Forex and studying it, I spent many hours, many months looking at trading strategies. I threw all kinds of indicators on the charts, tried all sorts of there's so many, looking for what was termed as the Holy Grail, which doesn't exist. Even though I kept reading, don't go searching for the Holy Grail because it just doesn't exist. You still go hunting for it because you think you've almost cracked it. You keep trying new things and you think, yeah, actually that's kind of working. You go back over historic data and you say, oh yes, it's working here. But the truth is, past price action isn't going to determine or give you with any good accuracy to be able to trade successfully for the future, if that makes sense. The markets evolve and change based on human behaviour, and I personally don't believe that you can accurately measure that in any way, certainly not just from the price data or on the charts. So trading indicators, if you're trying to use them to determine future price levels and predicting where price is going to go, you're going to be wrong more often than you're right, or they will be wrong more often, you'll find. You can apply them to past data and it might look good, but it's totally different in a live market. It won't work like that. Otherwise it would be very, very easy. No one would make any money. It would just be too easy to create trading robots that just traded based on that. The most important thing is probably the fundamentals. So my second piece of advice would be to never go all in. Don't go all in on one currency or one market. Don't put everything in at one price point, thinking that, well, it'll either be it's going up and you're thinking, I don't want to miss out on this, so I better go, get in quick, or it's coming down and you're thinking, oh, it's really cheap. It's not going to go any cheaper than that. You will get caught out more often than you succeed on that. Because what you're effectively trying to do is pick a top or bottom, and it's very highly unlikely that you're going to do that. You're not going to do that in most cases. The strategy that I used and that works really well for me, there is obviously a lot of different strategies that people might use, and other people have different successes. I'm only telling you what I found actually worked really well for me, and that is to scale in and accumulate. So you'll only risk, say you've got £20,000 to invest, and you've been watching some projects or some currencies that you're quite interested in for a couple of weeks or so. Let's say you had £20,000 that you wanted to invest in a particular project you've been looking at. The way I would do it, or the way I'd done it, is I wouldn't put the whole lot in one go. You probably want to put in, say, 5%, for example, just to get in and start accumulating. So from 20,000, you'd say put in £1,000 at the price that it's at, and then you've bought in at that price. So now you're not exposed whether it goes up or down. Obviously it'd be good for it to go up, but most times it will hover around the same sort of price, then maybe go down or up. So you're not too emotionally attached as well, which is another big problem. Well, kind of beginner mistake is you become very emotionally attached if you've gone in too heavily, and you can start making really bad decisions. So that's my second point really, is just scale in to your trades. And what you want to do is set particular price levels that you want to buy in, scale in at, say, 5% each time with your total fund. And gradually you'll build a position, and you'll have the same, well, if not more, tokens or cryptocurrency than if you had just gone all in. And you'll be at a much better price, and it will be controlled. You won't be as emotionally attached in it, so to speak. And also things change as well down the road. So something bad could happen with a project, and then you decide, well, actually, I'm glad I didn't go all in on this. I'm only in for 5% or whatever. Or maybe something good happens, and you start building your position. You can go in more confidently, and you go, okay, yeah, things are shaping up really well now. Now I want to go in, 10%, 20%, and just gradually build up like that. So that's a pretty good strategy for managing risk with your trades. Okay, so I've kind of covered with you the fact that technical indicators and knowing that the price of a token is going to be at such and such a point in the future, like 2 weeks or 2 months or whatever, that's pretty useless, to be honest. The second point, scale in. So we talked about entry, scaling in gradually, controlling your risk. The third point would be your exit strategy. So how do you then, once you've accumulated and you've built a position and you start exiting? There's a good sort of quote or saying from Warren Buffett, and one of his things he said was that you never sell, never ever sell. And I always wondered, well, if you never sell, how can you capitalize on that? How can you actually, get a return on your investment? And I think it was more the fact that he's probably saying, people sell too quickly, or they try and exit, too quickly rather than building their positions for a long time. If you can imagine, you had invested in Bitcoin at the time I started getting involved at around $11, and it went up to say $200, and you exited everything. Then you're like, wow, I'm up so much percent. And yet, give it a couple more years, and it's gone up to $20,000. You can see the potential. You've just cut yourself short, or sold yourself short, so to speak, by rushing out. So again, I would scale out of a trade. So perhaps it goes up you know, at a certain level, and you think, okay, well, now I could cover my original investment, so I'll take that out. So now I'm still in, and now I've got no risk. I've taken out what I originally put in. Now I could utilise that and invest that into another project. So yeah, scale out gradually as well, and probably try and keep a position as well, because you just don't know how big it's going to go. If it's a project you've researched and you like and it's going somewhere, who knows where it could go to, just given some time. So that was just some, you know, 3 pointers that I've used for trading successfully myself in the crypto space. A lot of it was learned from the Forex market when I was really involved in that. That's a very, very challenging market to get involved in, mostly because it involves margin, which adds more complexity into it. You certainly wouldn't advise risking 5% or 10% in that situation, but it's a bit different with the crypto space. The potential of rewards is huge in this, obviously, as you see. And also just try and avoid paying too much attention to the FUD, which is an acronym for fear, uncertainty and doubt. You see a lot of that when it starts going down, and then you hear all the hype when it starts going up. Just kind of ignore that a little bit. It's negative press, the negative news, it's all going to crash, it's all going to go over. We've heard this story many, many times. And what happens is it bounces back much stronger than before. Now we don't know what's going to happen in the future, but what I would say is, you know, take that with a pinch of salt. What you'll notice is everyone says, when it's gone down, when it starts going up and increasing, everyone says, oh, I wish I bought in at that point, I wish I got in then, it's too late now. And yet when it's going down, people say it's all over, it's too late, it's finished. When that is actually the opportunity for you to get in. But it doesn't mean don't risk what you can't afford to lose. So, you know, don't use your savings or, you know, everything, you know, don't put your house at risk. It should be money that if you did lose, that it's not going to hurt you financially too much. It's not going to cause any problems for you and your family. So yeah, just go in gradually. Yeah, hopefully that helps some of you, and thanks for your time.